individuals which worsened when Kenya imposed another round of travel restrictions to and from 5 counties in March this year. Central Bank Governor Patrick Njoroge says mining and building and construction are the most affected, noting that this is due to delayed payments.
Kenya's employment scene worsened in April as private firms cut jobs necessitated by, among others, restrictions imposed in the month of March this year, which saw Nairobi, Nakuru, Machakos, Kajiado and Nakuru treated as one zone, with residents barred from travelling to other areas to control the spread of COVID-19.
April, we all were under the constrained environment of the containment measures, and in particular the 6 counties, right? The 6 counties that were under lockdown. Obviously, it was not as severe as the lockdown that we had previously, the first lockdown. At least the economies were still, a lot of economic activity was still taking place.
The disruptions took a toll on businesses, with lending by commercial banks to companies and individuals slashed.
The ratio that we have been looking at is the gross NPLs relative as a share of gross loans, and that decreased from 14.5 to 14.2 in April, and this was really on the back of significant repayments and indeed also some write-offs in this sector, in this area. And the 7 out of the 11 economic sectors that registered decreases in NPLs, that is in Kenya shillings terms, the top 4 were transport and communication, real estate, tourism and restaurant, and of course, and agriculture. The 2 sectors that that we flag for, or we see that there has been an increase in NPL. These are building and construction and mining and quarrying, again due to delayed payments.
Central Bank Governor Dr. Patrick Njoroge says private sector credit grew by 6.8% in the 12 months to April, compared to 9.7% in the year to February, well below the central bank's target rate of 12 to 15%, deemed adequate to support economic development. On the other hand, the banking industry recorded marginal improvement on non-performing loans, whose ratio stood at 14.2% in April, compared to 14.5% the previous month. This was supported by repayments and recoveries in transport, communication, restaurants, hotels, and the agriculture sector. Kenya's central bank held its main lending rate at 7% on Wednesday, saying inflation was expected to remain within the target range, supported by lower food prices and muted demand pressures, despite the recent increase in fuel prices. Regina Manyara reporting for Channel 1 Business.